Welcome. In this episode of Castoshi, I talk to the founders of Theia Finance. They are building a Kickstarter for the crypto world, a platform where creators can go and get investors for their projects. They even want to go a lot further than Kickstarter by building a full stack company platform into their product. Theia Finance is still testing the system, but so far the response has been amazing, with nearly 20,000 people engaging with their platform and thousands of monthly users trying it out. They also have a novel method to prevent scams by putting all invested money into an escrow account to stop people from shutting down projects as soon as they are funded. We talk about this and a whole lot more, such as the future of crypto in the next few years. Join us for this amazing episode. Welcome to Castoshi, and today we're talking to Theia Finance. So if I could let you guys introduce yourselves and then just tell us a bit about what your company does in 2 minutes.
Yeah, I can go ahead. So my name is Lawrence Huang. I graduated from Columbia University studying political science and economics. Worked in venture capital, worked in finance. Really dipped my toes into crypto maybe 2 years ago. Definitely not as degen as my co-founders, Rourke and Nikita. I actually went to high school with Nikita in the UK. And so I've known him for 8+ years. He kind of disappeared for a year and came back with this white paper that he wrote, and was really interested. Shot it over to Rourke, who I met freshman year of college, and yeah, ever since then we've sort of been running with it.
Okay.
Yeah, that's just a bit about myself. I'm the CEO here as well. My background comes from basically economics. I studied at LSE, Business Analytics and Data Science, which kind of naturally got me really like intrigued into the world of and incentive designs.
You keep breaking up. You're breaking up a little bit, by the
Actually,
way.
Yeah, Nikita.
can you hear me now? Is
Yeah.
it better? Is that better?
Yeah. Do you edit this? We can.
I
Yeah.
do edit it. I mean,
You just said
actually,
keep it unedited.
We just said
Let's start from the beginning. Yeah, I kind of screwed this ball.
Thanks, Larry. I mean, like,
actually, but the thing is, this is the best stuff. This is the stuff you shouldn't edit out, actually.
yeah, I mean, geez,
So it's fine. I mean, this is
No,
something I would say don't edit out.
This is about us as founders.
Yeah, I mean, this is
Well,
what it's like as a startup. You start up,
we're
things
gonna
go
think
About
wrong.
your bad Wi-Fi
Yeah.
connection.
Jeez.
Okay, Nikita.
It's a classic.
The one,
Start. I'm sorry.
One time the Wi-Fi connection.
one time, like, I'll
I tell you what. Why don't you go and then he can try again in a bit.
no, just don't worry about it.
Let me try again now.
Let's just
Alright.
roll through it.
Right. So just to start that again for myself, I'm the CEO and co-founder here. My background comes from economics. I studied at LSE, Business Analytics and Data Science, which naturally got me like really intrigued into the world of tokens and token engineering more specifically, where you could design like really cool kind of incentive structures, which just weren't possible in traditional finance, for example. And I started researching into the area of public goods, kind of researched mechanisms there, and wrote this first white paper about basically trying to remodel incentive structures in that area. And then we realized, after speaking to basically Lawrence and Rourke, who we got on board, I got on board very early on, that what I had basically wrote or what I designed could be used in a much kind of bigger use case and for just in general a better way to fund the Web3 projects. So that's kind of how we started, and now it's now our product is evolved from that, right? So that's kind of how the project formed.
Yeah, and my name is Rourke Cattell, so I'm the CTO here, and yeah, I kind of, as Larry mentions, I got my start. I studied computer science at Dartmouth College here in the States. It was really a degree in computer graphics. I wasn't the primo engineer that a lot of my contemporaries were, but I definitely had a passion for computer graphics, and more specifically, like in the fields of augmented and virtual reality. And just as a result of doing a lot of my own personal projects, school projects, I got involved in some of the communities just from a bird's eye view that were doing some of the earlier leveraged digital asset implementation. Really like the first big use cases of something like the NFT back in sort of 2018, 2019 territory. Like Decentraland, they minted a lot of those plots originally back then. And coming from a gaming background, I really saw the writing on the wall pretty quick. So I got some financial involvement there, small stake, and obviously got to ride the wave of that being integrated, more broad spectrum, and then rolled that into a lot more of the PFP wave as well, and being there for that and that whole 2021 year.
What's PFP? Could you define PFP?
Picture for proof. It is the primo NFT model currently. It's what you see when you see Bored Apes. It's what you see when you see something like Azuki, or it is the concept where I think, if you were to ask me personally, it's almost like a happy accident in many ways, but it is what you see in the news when you hear NFTs, and it is kind of the defining mechanism for utility in a lot of ways. So, I got to ride a little bit of that wave, and in the middle of 2021, I was talking with Larry about what I was doing and kind of my own personal exploits, and he told me about what Nikita had been making, and I think it resonated really heavily with me because I had a lot of firsthand experience, both for the really cool stuff and the not so cool stuff that would happen in the space, and I could kind of see a little bit of the writing on the wall where the gold rush, especially with PFPs, was going, and the how that could result in some unhealthy market dynamics, and so I was very inclined to jump on the project and kind of keep going. But Larry, if you want to give a little spiel about what we're doing here, you can go right ahead. A little redemption.
So Theia is creating the new home for Web3 communities. We're creating a protocol that's social and financial in sort of type. We have a social protocol that allows communities, what we call collectives, to curate and support projects and earn money doing so. We also have a financial protocol, a marketplace escrow protocol that allows for investors to buy digital assets, but also guarantee refunds doing so. So we use these mechanisms that we've built out to basically incentivize trust and accountability in Web3, and to make interactions and collaboration on Web3 more social and safe.
Okay, so you said it. So you said that it allows refunds. So that says to. So how do you determine if someone gets a refund if they put money in and they and then the owner just misspends the money?
Right. Yeah.
I have looked at
questions.
your projects, by the way. I've looked at your website and I've seen the projects, and I can see you're on the AVAX testnet. So you haven't got live projects yet, but I can see what you're developing. You're trying to basically develop, what a lot of people are calling DAOs in technical sense, but you're trying to make it specific for certain types of projects.
Right. Yeah. So the way to think about Theia is almost like a two-tiered structure. We have Lawrence was talking about this novel investment, basically protocol, or escrow protocol, as I should say, and that's really what allows to kind of protect investors at the ground level. And then built on top of that is really this infrastructure where we have this platform, this home for Web3 communities, where we have these collectives that are DAOs. Really, you kind of hit the nail on the head. But to kind of go in on the refund aspects, basically how we protect people who are purchasing digital assets in something like a primary sale, let's say it's like an NFT mint, is we create a degree of separation between the native asset that the project's providing, let's say it's like an NFT, and the supporters themselves, the people who are purchasing it. So when somebody comes into, like, let's say, a NFT mint that would be a function through our platform, when they come into purchase, when they actually come into invest, so to speak, they're not buying the asset outright immediately. So it's not like they're just purchasing the NFT immediately as it would be in a traditional mint. They're actually investing into a smart contract that represents the project. And as a result, the contract mints them tokens that basically represent a proof of deposit of sorts. And these representative tokens kind of represent their stake. And once a funding target has been hit, it's basically just, like the project is like, we want to sell at least 500 of these or get commitments for at least 500 of, let's say, 1,000 NFTs. A conversion period of sorts kicks off. And basically throughout this period, individuals, basically the investors or the supporters in this instance, in their own autonomy, each can choose to either commit fully to the project and basically send back these representative tokens and get the real thing, or they can sell back these representative tokens back to the contract to basically take their money back. And that kind of creates a culture of accountability between the project and the investors, because the money is committed, but it's not given to the project upfront immediately. It's really it's up to the project to prove to the people supporting it that they're both above board and worth it. And at that point, that can be a completely individual decision for everybody involved. They can choose to basically commit fully. Like, okay, I'm satisfied. Let me take the NFT. And then only at that point is their money unlocked and sent to the project.
Okay, so are you saying, just to see if I understand it, so
yeah.
Say I see a project and they say they've got a 5-year roadmap, and
sure.
and I put in $10,000 of USDC. That USDC is held in escrow, and then and then whoever's created these NFTs, on their roadmap they say we'll do this first launch, and then after 1 year we do a second launch. So you saying that the time span could, or the whatever the business logic is, it will say once they've released their second NFT launch, then you commit the money, or is it based on time?
It's based on time. So it's actually a length of period of time that the project can set. So it can't be longer than a week, or shorter than a week, I should say. Sorry.
That makes sense.
Yeah, it can be, yeah, that'd be more. It's like, we want it now. No, it would be, but it can be actually as long as the project can really specify. We anticipate that different projects will look for different lengths of time for that conversion period. But yeah, basically throughout that entire period, the people supporting can choose what to do with that escrow. If you get to the end of that period and you haven't done anything, you haven't either converted or sold your escrow position back, it's basically automatically converted. So it's not like investors can hold the project hostage necessarily, but they can have a little bit more autonomy to just suss it out a little bit. Like, I want to show my support, but let me just at least commit a community ready. But then I can have a little bit of protection assurance that I'm not FOMOing into something, that I'm not. It's like this 3-hour experience. I have to get in right now, otherwise I'll never get it again.
Okay, so is it a bit like Kickstarter, where if you don't reach the funding goal or the time span, then basically everyone gets the money back?
That's right. Exactly. And I think another good way to just think about this, like why this actually reduces the barriers to entries for projects and adds some more flexibility.
Yeah.
Oh, it happens.
It's a great
Whenever he
mechanism
speaks,
to
it
kind
happens.
of
He's
get
got
the community engagement, like a proof of concept.
You might want to turn your video off. You might want to turn your video off,
Yeah,
because
I want to
maybe
turn your video off. It might be that. You might just be a little like.
Is that better?
Yeah, a little bit.
Is that better?
Yeah, Nikita, you want to say that again?
Yes, of course. So I was saying that this mechanism allows for much more flexibility and really reduces the barriers to entries for projects to kind of just get a feel like, does the community actually want this project, right? And essentially, by having this escrow mechanism, people can essentially vote with their dollars without having to commit fully. So it's like, okay, if I've got this bunch of supporters, maybe this product actually needs to be built, right? Instead of it's like kind of getting validation rather than, let's say, building it out first and then doing a mint and then, oh wait, no one wants this, no one wants to buy it. I've spent all this money and time and I've got to this stage, and everyone who does buy it is basically screwed because the mint hasn't sold out. Now you're labeled as a scam, right? It's a very kind of hard space to get from 0 to 1, and we're trying to both make it easier to go from the 0 to 1 category and make it safer for the investors themselves.
I think it's a hard problem to solve. I mean, the actual idea itself, it like a lot of people, I've seen people who've talked to me about such similar things to this, and I know also in the Learning Solidity book, this is actually the example they use, which you've probably all seen. um, so where do you see that? Like, you probably know other teams who've tried this same thing. Where do you think that the other teams have tripped up when they've been trying this?
So I think generally the approach to solving the problem of like credibility or trust, accountability in the space, one of the biggest proponents is something like centralized launch pads. For example, your DAO makers, your Binance launch pads, to varying degrees of success. And we think that that's a bit of an antiquated approach because it's, yes, they in the pursuit of this security and assurance, because it's, you know, it's curated by a centralized group of members, basically, they limit the scope and accessibility of compatible projects to the nth degree. You know, it's like applying to college, really. It's like a reskin of a lot of existing like accelerators and incubators in the traditional space. You have a centralized team of maybe 10 or maximum 20 that fields thousands of applications for thousands of companies across thousands of verticals. And as a result, just conversely, you result in limiting the amount of verticals you can address, and then the amount of chains you can address, and the kinds of projects you can address from a scope standpoint. You know, not everything is, you know, an infrastructure protocol. Not everything's a DEX. Not everything's.
Oh, okay. Could I just ask you this? So you're trying to say because most of the projects on there are on the BSC Launchpad.
Yeah.
I mean, I think, yeah, you're right. I'm understanding because I've done a few of the Binance launches, and first thing is you only get like 0.1% of what you've of what you apply for. Like have you been into a Binance Launchpad?
Yeah.
And so say you commit $10,000, you'll be lucky to get $100 when it actually
Exactly.
launches. That's probably the biggest problem. But that's kind of how it's designed, because I think Binance is designed to build up the FOMO and the fear of missing out, you know, and all of their launches are massively oversubscribed, and in some ways they're kind of designed for pump and dump. So as soon as it launches, people just dump, because literally you can get like 20 to 50x on so many projects.
Right, and in that accessibility standpoint is constrained not just from the project side, but also, as you mentioned, the support of the investor side. You know, for something like that, whether it's the show model or even with a lot of exclusive chain-specific launch pads, there's a queue to get into to actually even participate in it. And a lot of times to even participate, there's like a financial commitment that's required. And so as a result, we think that that's not really a way that embraces, you know, what Web3 is about. You know, we want it to be an open and accessible ecosystem in many ways where anybody can partake, but we want to make sure that we secure that ecosystem on a solidified foundation. And so that's why we took the approach of solidifying those principles of security, accountability, in the trustless framework of Web3. So actually building it right into the smart contracts, into that sort of now novel escrow system, to embrace what Web3 is about, but then still offer this kind of trust and security standpoint. And then, of
Can I
course,
ask you a question there? On you said it that you don't need the same financial incentives because when you go to Binance Launchpad, you basically stake your BNB. You know, you lock up your BNB.
Yeah.
So, are you saying that you don't have to lock up any tokens to join yours?
No, you just need a wallet.
you just need a wallet,
wallet.
and that's it.
So what if a lot of people, like, what if someone creates a project and then they like go out and make like 1,000 wallets, you know, and they pledge that they're going to join their project, or do you actually look at the wallet to see if they have assets?
Right. So we've built out again. It's kind of two layers, right? So we have the actual protocol, the escrow protocol, but what's really the all-encompassing part, where we really want to make some generational change as well, is through the DApp layer, through the actual platform itself. And I know Larry is really good. He can speak on a lot of the collective side, which is the curative aspect. But just in terms of how we design the platform, we've designed it to be as transparent as possible all over the platform. That means in basically offering as much information as possible for every single project, all the metrics for the investors, the money committed, the project itself. But then also, one of the things that we really want to make is fundamentally a social platform. So when you look into a project, you can basically see everybody who's committed to that project and how much they're committed for.
Can I ask you about that commitment again? Because you said that they just have to have a wallet, but they don't have to have funds there. But then what do you need the escrow for? Because if you have an escrow, it means you both put the funds in.
To actually to get an allocation in your project, you have to have a wallet and invest.
You need to invest. Yes, sorry. That's what I wrote. Thank you for clarifying.
Yeah, so you're not reserving a spot, like let's say as you would when you stake BNB or whatever. In our case, you're actually investing. So you're essentially buying an option. Like that's a good way to think about it. It's an option, which also gives you a way to refund it.
Okay, yeah, because with BNB, you don't know how much you're going to get until it launches. You're saying you know how much you're going to get, and you can say, "I'll keep that," or "I'll dump it."
Exactly. Yeah, I'll keep it, or I'll give it back to the escrow, basically. Like, I don't want it anymore.
But they have to. But they won't. If they see that a token suddenly goes up a lot in price, they could just say, "I'll keep it." But if it suddenly dives, what's to stop everyone from dumping?
Well, there's no one gets screwed because it's an escrow system. So if you invested at the bottom, right, at a cheaper price, let's say you invested $100 and you got so many of these proof of deposit tokens, even if the price increases, the buy price, the sell price for you as an investor remains the same. So if you invested $100, you can only refund $100. Whereas if someone invested later, let's say at a higher price, whatever they invested, if they wanted to refund, they'll only get that much back. So there's no kind of variance in the sell price.
So they'll get back the same amount. So is it stable coins they get back, or do they get back the
stable coins?
Okay, they get back stable coins. Okay, fair enough.
So we always guarantee your principal, basically.
Yeah, I'm just trying to make sure I understand it. That's why
No, of course.
And on the Launchpad point, more on the platform social side, we basically allow anybody to become their own Launchpad or anybody to become their own syndicate. So basically, for example, if you wanted to create your own collective, you could source deals, have them launch on your collective, and then you become a mini Launchpad. You can charge a commission rate on all the sales of that digital asset, and you can generate revenue. Same thing for NFT collections. If I'm an NFT collector and I know a bunch of artists and musicians who I really want to support, I can then onboard them onto my platform, turn my collective into a mini OpenSea, a mini marketplace, and then I can make money off the sales and secondary sales of that digital asset.
Yeah. So what Larry's trying to kind of speak about is sort of it's what we call collectives, right? It's our attempt at decentralizing the due diligence process of Web3 by way of micro verticalizing it. So in essence, we know that communities, DAOs, and in many ways, Larry likes to kind of refer to it as the secret sauce for for accountability in Web3. These financially and socially aligned communities that exist around an identity, and that identity often represents a vertical in the space. Whether it's play to earn game guilds or even something way more abstract, is all the way up to something like Constitution DAO. They can be aligned around a goal or an identity or something in the space, and then by taking hold of those communities and basically leveraging those as the curators for projects on the platform, we can micro verticalize all the way down to the project level, to where play to earn games that are RPGs would look to collectives that support that specific vertical, and that solves a big problem for discovery in the space as well as accountability. Because if it's FWB co-signing X project, that creates a layer of trust that is then further crystallized by the security that the protocol actually offers in that primary sale.
Yeah.
Okay, so you'll have communities. So you're not just, it's not going to be like Kickstarter where you go out directly just to individual creators.
No,
You'll be going to
no.
people who will be kickstarting their own several projects themselves.
That's right. Yeah.
Okay.
So we would be
Well,
basically
here's
target.
the thing.
Yeah.
They're not the projects by the collectives don't have to be started by the collectives. It can be individual projects that the collective knows about and has reached out to.
Okay. Okay. So next, can I move to a technical question? So, and actually slightly business as well. So, are you starting off centralized and moving to fully decentralized, or are you decentralized from the very start?
Yeah, so our approach to our launch is, you have it absolutely right. We'll start from a centralized approach and then gradually decentralize from it, and that's in basically multiple stages. So when we hit our alpha launch, in a sense, the platform itself, us as the team, will be the principal collective. We'll have a small collection of projects that we'll show to the world, basically, and then we then move to the next stage, which is where we have a curated selection of collectives, basically. And we have kind of a growth hack that we want to approach that task. But again, it's all about leading with quality out of the jump. And we really feel great about a lot of the conversations we've had with people in the space and who actually already wants to get involved. And then only after we've run that course, we then move to the fully permissionless state, where anybody can create a collective, and then anybody can then create a project as well. So we want to make sure that when we hit that permissionless state, we're really leading with quality out of the gate. So we set a good culture.
Okay. So like maybe in 2 to 5 years, you can move to fully decentralized, because that's the norm in most of these projects.
Yeah.
If you actually become decentralized within 5 years, that's extremely fast.
Yeah, we think, we know Web3, especially in the creator economy, moves fast, and we want to make sure we address the verticals that we want to address out of the gate. And so we feel that we can get almost a pseudo decentralized system rather quick, where we have a really good spread. But then you're right, in terms of moving to fully decentralized, fully permissionless, we want to make sure we take our time and be diligent in that process.
Yeah, the reason I ask is, just say for you guys, if you all get sick of it and you find out there's no money to be made, but just say you have 5,000 projects on there, and since you guys will have the admin keys for updating certain key smart contracts, if you guys aren't there, basically people will get their money locked in. So just say you got $100 million of people's money in there, but you guys are like, look, we're losing money on this, and you drop out. What happens then?
So we're the nice part about our
can I answer this quickly?
Yeah, sorry, go ahead.
Just 2 points. Firstly, the actual smart contracts, like the escrow contracts, are non-custodial. So we don't actually control any of them. When supporters are investing into, let's say, a project or a collective, they're fully owned by essentially the smart contracts. They're decentralized. When it comes to actually what I think you're mentioning is more like the general management of the platform and maintenance of that, right?
No, I'm actually talking about the smart contracts, because people always find bugs in smart contracts. So what they do is, for example, when people go to your website, you're pointing to a smart contract somewhere on AVAX, and then then as you find different bugs and problems, you
Yeah.
will basically change that address in your front
Of
end,
course, yeah.
which is probably something a .com or something that you guys own, or .finance, I think it is. So you will manually have to change that, and if you're not there, I mean, people on the web or people who are running projects through you, they're not going to go through the effort of finding out of reading all of the EVM bytecode
Right.
and reverse
Of course.
engineering it.
Yeah, no, that's why we, so as Nikita mentioned, in terms of our actual products, the smart contracts are designed to be isolated. They're non-custodial from our standpoint. So when the funds are controlled in that contract, you think of it as a arbitrator between the peer-to-peer. Now, with that said, obviously these things can be upgradable, right? And if there are bugs, or if there's something that you want to fix from a security standpoint, even potential exploits, you need to have that infrastructure there to be prepared, which is why, fundamentally speaking, our team is committed to that entire term, as a team. But then also, any front-facing mainnet launch for any of our contracts, we will make sure that it is fully, entirely audited and stress tested. Our contracts have been run through hundreds of user tests at this point for optimization, then also stress tests with malicious actors in mind, and also like white hat, black hat tests as well. And when we actually get to what would fundamentally be a permissionless state, our absolute priority is making sure that it is as self-sustaining as fundamentally possible, and that also goes for our front end. We're really designing the business side of the platform to be self-sustaining in as many ways as possible, so that we obviously plan to be in it for the long run, but you never foresee how things kind of go, especially in the field of decentralization. So we want to make sure that we have all of our P's and Q's sorted completely before any project really, or any contract hits the mainnet, and then especially post that period as well.
Okay. Do you other guys have anything to add to that?
I think that's a good answer.
Yeah, pretty solid.
So you're saying trust us?
Well, it's I think
it's fine if that is the answer. You have to say trust us until, and but we intend to go totally decentralized. I mean,
so we do over the long term, as you say, like in 5 years or something, we do plan to have a governance, basically model, hand over the governance to our basically native token through basically a governance structure. So long term, the plan will be decentralized, but it is also likely that even that DAO will have a commission, let's say, our development team to do work, if that's the most efficient strategy. But there will be a lot of open source stuff as well. I mean, just look at Polkadot. They are fully decentralized, but their governance DAO still utilizes.
You only need one centralized component to bring the whole thing down, and that's how most of these hacks go down. They just find one thing.
Yeah.
I mean, I'm a software developer for 30 years, so I never used to believe that crypto would work, because I thought that the bugs would basically bring the whole thing down. And what I got wrong, this is why I could have been in Ethereum at cents on the dollar, but I never did, because I thought, no, this stuff is, I knew how hard it is to get, working software without bugs. But what I got wrong was, I never feel like, if you develop software in most companies, your bugs, they can last for years and no one finds them because they're behind firewalls. But if you write a smart contract, your bug, someone will steal the money immediately. So that's what I didn't counter. It would actually make crypto more resilient, not less. That's the part I didn't figure. So
right. Yeah. No, I definitely, and that's what makes a lot of, that's what makes like Ethereum even really unique in the blockchain space, right? Because they have that rigidity. They have that. If somebody's trying to push something to geth, or there's a lot of solidified infrastructure that is truly decentralized. It's not like Solana that's got this vain sort of interpretation of decentralization, but when you look under the hood, 60% of the validators are like all clustered together. So all it takes is one, compromise, and then the whole network starts to wobble extraordinarily quickly. And so we really want to make sure we approach more that solidified, solid state of decentralization. And I think we approach that from an architectural standpoint with how we design the protocol, right? Like it's designed to be the intermediary. It's not designed to be a hub, right?
Okay.
And I think, as Nikita mentioned, we really want to make sure that over time, we can correctly move towards that. That solidified.
And just to add on that part, add on that point, sorry, like a lot of the big hacks in crypto, it's because of the architecture, right? It's because there are basically these big honeypots with all the money together. Like, for example, the wormhole hack, it's because the bridge is one big honeypot. So it's very attractive for a malicious actor to just come in and just drain that, right? Similar, like you see that with wormhole, Axie's bridge.
Axie's bridge.
Exactly. But in our case, like everything is it's siloed, right? Every project has their own smart contract. So for a malicious actor to come in, they have to go into every single smart contract to do that. It's kind of like on the Bitcoin network. Like to hack the system, you have to have enough computing power to hack 51% of it. I mean, it's not a great analogy, but I guess it does.
It's actually a terrible analogy because all they have to do is look at your ETH contract where you have the contract addresses, and they just run the same code on. They'll probably do it on a smaller one first. If that works, they'll do a for next loop and just do it on the whole lot. In one go.
So,
but it's good to have an analogy, but maybe find a better one. I'm not trying to give you a hard time, but yeah.
Well, I think
That's all
a
good.
better analogy is like, you figure out how to hack into a specific lock, right? And then you have to go door to door, find out the lock, find out which door uses that lock, and then hack into those. So I mean, the point that I think Nikita's trying to make is it's a lot more difficult to hack our system and drain all the money that's on our platform than say hacking a bridge, where you can exploit one aspect of the code and then get access to millions, if not billions of dollars.
Right. But
that makes sense. Yeah, that makes sense. Yeah.
Yeah, but obviously, regardless, we're not about to just chance it anyway. So that's
which is why like security audit is number one of our priorities.
It's not even just auditing. It's having our community take an active participatory role in stressing our own system. That's a part of the reason why we're running our testing process in such an iterative and kind of crawl, because we want to make sure every single stage is solidified before we just package it and ship it. So we every with our initial test net, which was a couple of months ago now, it was just one project simulated, one group of test tokens, very, very straightforward, one page. And then it was just contract page. And it's just, can we find any big holes with that, either from a functional standpoint or a security standpoint? And we certainly did. We certainly found definitely some further optimization we could do, especially when it came to like our conversion system and a lot of that, and even some of the security as well. And then now that we move to our V2 of the test net, it's again building on that and adding other elements, adding more of the front end, more of, but still constantly encouraging the community to, try and break the system anyways, right? Trying, whether it's from an experience standpoint, just trying to like accidentally front running, or just trying to get a million different transactions, and or actually trying to simulate some sort of malicious attack as well.
Okay.
And so, and obviously before we push anything to mainnet, it'll be thoroughly audited, properly, by the necessary firms, but you still want to make sure that you're not leaving it up to an audit. You want to walk into an audit.
You can't leave it up to an audit.
Yeah,
because
most
stuff that's been hacked has been audited. So.
Yeah, exactly. You want to walk into an audit feeling really confident. You want to walk.
I've got one other question with the security. I know I keep beating a hammer on this.
Okay. Yeah.
So because you're an AVAX, are you if just say Ethereum then switches to like proof of stake and it gets 100,000, 10,000 times faster, and then you want to switch to Ethereum, then you have the issue of how do you cross over all your assets to Ethereum from AVAX?
We're actually fully EVM agnostic. So we're on the Avalanche testnet because it's a great testnet that we just have a good relationship with Avalanche. But the protocol fundamentally is built to be completely agnostic for EVM as well. We're also building out a Rust infrastructure with Near. They're one of our partners to build out that as well. So we do have ICBC that does handle bridging.
Oh, you're using Cosmos IBC?
No.
So what did you say? I didn't hear what you said. Did you say IBC?
We're actually using Acceler. So
what is Acceler? Sorry, I don't know.
Acceler is it's basically a cross-chain protocol, which is probably one of the most highest quality and most decentralized ones out there, which enables basically cross-chain transfers.
Is that using IBC? Does that use IBC and Tendermint underneath, or?
As far as I'm aware, they do not use.
Okay, I'll have to look at that. Excelsior.
IBC.
I'll have to look at that.
XLR.
XLR.
Yeah, it's basically instead of Excel, ALEXAR. Yeah, Exceler. No.
AXELAR.
Yeah, AXELAR. Thank you. AXLR. Yeah, there you go.
AXLR.
They've got a fantastic team over there, and because a big part of our initiative was again accessibility from both a social and functional standpoint, but also from a chain standpoint. We want a Ethereum based projects to have supporters that are Avalanche based and vice versa, and that's same for Polygon, and whether it's Rust, that's Near, Solana, but again, still the foundation exists the same on each of those chains. So we wouldn't have to make a left-hand turn if suddenly Ethereum decides to go, because we're already there.
It's quite interesting that you've chosen to do it not just EVM compatible, because the code I've been writing recently, I've just made it EVM compatible, and I've stayed away from Solana or there's so many languages now, and Viper and all that. I've stayed away from them.
Yeah, we obviously EVM is it's the flagship in many ways for the alt chains, right? I mean it's because Ethereum is the big daddy. I think Solana has a lot of issues. And obviously it's not the champion Rust. There are probably better, more secure chains that handle smaller loads, but we understand there's a whole ecosystem there, and we understand that there are a lot of verticals that like to utilize Rust primarily. Play to earn is a big fan of something like Solana, right? Because it's really all about high transaction volume. It's about there's industries that, as a result of just the way in which they function, they're going to have to handle that sort of optimization.
Or the book exchanges, for example.
Yeah. We want to be open to that. Now, obviously, it's concerning to us that something like Solana has been offline 8 times in the past 6 months. But they got stuff to figure out there. They got stuff to figure out.
A lot.
But the premier.
I was actually laughing out loudly. It's just that I was on mute. Yeah. I'm not like some evil.
I got you. And we understand there's EVM counterparts as well. Wax is a really good example. They're a high volume, low to zero gas network that's fully for play to earn, for example. And so there's multiple ways to crack an egg, and really it's just about understanding that there's user bases off of both of these languages that is significant enough that we feel that it would be detrimental to our mission statement to exclude that, to not have that compatibility built in.
Well, so are you then? So if you're on two chains, are you then using XLS?
Exceller, yeah.
Exceller.
Are you using that so that the projects can move between the two chains? Are you kind of testing that yourselves then?
So technically speaking, consider it as two lanes that run in parallel. Obviously solutions in terms of bridging from Rust to the Solidity base, they're not great currently.
And they're much more risky.
Yeah, they're a lot riskier. So in theory, if you were to invest in like a near based project, you would need a near wallet, but if you're EVM, you'd need MetaMask or Fortmatic or custodial wallet or something. And but they're still hosted on the same platform, right? So you can still view it, you can still and so when it comes to actually bridging in between those, when it actually comes to going like EVM to EVM, Rust to Rust, yes, that's where something like Exceller comes into play. And so it's consider it like Exceller is really helping us pave these two roads that run parallel to one another on the platform.
Okay, so I think I've busted your chops enough on the technical stuff. What about? So I'm convinced you know more than me now. So I won't ask you.
Okay, don't say that.
Because if anyone knows less than me, then I get scared. Yeah. Okay.
Don't say that. You're gonna have me start.
Yeah.
Okay. So
finals all over again.
Yeah. Okay. So what about what's the progress been so far? Like business wise, and like test users, and you said you have a community, and
Yeah.
Right. So Larry, you can take this one.
Yeah. So we've had 2 testnets over the past 3 months. In total, we've had more than 15,000 users test out both testnets. So testnet V1 came out late March. Testnet V2 came out a little less than 2 weeks ago. We've had more than 15,000 users, and we've grown our community to more than 20,000 in Discord, more than 10,000 in Twitter through organic marketing. We haven't really gone through any of those paid channels. And yeah, we've had, the last time I checked, we had more than 800 projects created on our testnet V2. On testnet V2, it's not our full product yet. So our full product will have the 2-tiered structure as mentioned by Rourke. We'll have the collectives, we'll have the projects, and we'll have that curation mechanism, as well as a revenue generating mechanism for the collectives. But for testnet V2, we basically allow our community to create projects, and we have some pretty cool projects, some meme projects out there that have been created by our community, and it allows our users to simulate buying those product tokens, those proof of deposit tokens that Nikita was mentioning, and then sell them as well as convert them into the native asset.
Oh, that's pretty good. So those projects on your testnet, that when I went to your site, that's not you guys just sitting there like all night.
No.
I mean, Nikita did make one.
I made one.
Fair enough. But when it has a value on them, though, those values are just as if it was on mainnet, even though because it's on
right.
Okay.
So it's not like a full like a demo, like a video type demo. No, it's like literally if it was deployed on mainnet, it would be real money.
Work. Yeah, I could see that. I did connect. I did actually connect. Yeah. So what do they get out of it? The testers, do they get some of your own tokens, or how do your tokenomics work?
So we're not in the business of doing a whole lot of that kind of incentivized stuff. Really the primary benefit for like a lot of testers is simply to be a core component of the platform going forward. I mean, we have a whole alpha testing community that's a tight circle that's I think growing to it's above 200 now, I think, or thereabouts. And
something like that.
And those are the principal people we go to every time when it's like, hey, we're thinking about changing the interface in this way. Hey, we're thinking about adding this sort of feature. And I think the community really finds that feedback loop really engaging. And they want to be take that active participatory role in just shaping the platform. I think they all really see the value proposition and the need, but they just kind of want to be a part of that. And obviously, we do have a native token, and there's multiple elements of utility that come into it. One of the big elements is it is the principal currency to basically take part in collectives. So if you want to invest into a collective and get a stake in it and get a part of that governance and rev share, you have to you go through using our token. But it also serves as multiple purposes on the platform. It alleviates basically gas costs through a subscription model, and regardless, we do have some plans to reward some of our earlier users with that utility, basically. With that. The way being able to be maybe one of the principal collectives on the platform, having our community come together or a group of them, or having a couple of projects come in on our principal launch. We have some great builders in the community and some people who are really passionate. It's not just people who want to invest. It's actually a really good mixed bag. So, but yeah, I think overall, we've really been encouraged by the sincerity that a lot of people have come to the platform with. It's very easy to devolve into kind of like, we're going to airdrop you this, we're going to airdrop you that, and not to say that we haven't like offered growth incentives before. We have. I mean, that's part of the game. But I think the one thing that's been really encouraging is that every time somebody comes into the platform, it's then immediately becomes very clear that it's like, oh, hey, like, how can maybe consider changing this, or maybe want to change this, or I'd love to see this kind of feature, and it becomes really earnest about the platform itself, and I think that's a kind of a rare thing to come by in this space sometimes, especially now, especially in these kind of market dynamics, and so that's been a really heartwarming thing for us, definitely.
So people actually like your platform. So I understood you said you've got 15,000 people have tried it, 20,000 in the Discord, and 200 regular people who are always testing it like month on month.
It's probably in terms of concurrent testers, it's probably closer to 2,000.
Wow, that's a lot.
Yeah.
So how did you? So you must do. How long has it taken you to get that community? Because that must have taken some effort.
We kind of, for a long time, we had. I think we opened our Discord in February, if I'm not mistaken. And for a long time, it was basically hovering between, I think, 100 members, and then I think we got it to 1,000 by late March. And then the minute we dropped the first version of our testnet, which was very bare bones, as Rourke mentioned, we got a massive influx. I think over a few days, we went from, I think, 1,000 to 6,000 members or something, or even 10,000.
Did somebody mention you on a famous podcast
yes,
or something?
Yes, exactly.
Some relatively influential people in some spaces give us a bit of a cosign, which we honestly didn't expect at all. we kind of just went in there like, hey, try this out. We'd really appreciate any feedback. And I think some people tried it out and said, hey, I think what they're doing is cool. And then, it just kind of went from there. And so we're definitely grateful and it seems like, with every major update, we'll get kind of something like that. We'll get some person that says, hey, like I like this, and that's the one thing that's really encouraging, is that it's a really cool spread. Like I think one of the initial people that supported us on Twitter was a real infrastructure kind of guy, like very much into protocols, very much into the design, the implementation, and just a real technically focused profile. And since when we've gone to V2, we've had a couple of people that was like, I'm totally new to Web3, I'm trying to learn, and I have like this community with me. And it's like a very nascent group of people, and that's really a big group of people we're trying to target. Everything from the ethos of the protocol to the interface, to the front end, to the design, the user experience. We're trying to break down a lot of the barriers when it comes to Web3. You read a lot about how Web3 is great, but the UX is iffy. it's not really there yet, and we know the potential, but we know that in order to get that adoption cycle to keep moving, you have to get a lot more intuition baked into the thing, and to know that we have some people that are saying, hey, it's my first month or two in Web3, maybe I bought an NFT, maybe I did something like this, and they want to engage with what we're doing. That's a really, really great sign for us, and that's a really encouraging.
Okay, so who do you think are the main people that are going to use this platform? I mean, I saw because when I went on and looked at the projects that are on your test net, I saw there was a lot of stuff which looked like people were testing it out, but I didn't get an idea of what people like. Is it people who are saying, I want to have a collective of people in two different countries, or I want to, because I'm assuming it's not going to be someone who's starting a local business.
Yeah, I can quickly speak in this. So, um, I think when it came to our initial outreach and our initial sort of marketing, if you will, it was really based on content. So, um, I think the reason why we got so much traction initially was because people are frustrated and angry with the current state of the landscape, right? State of the market. We had $2.8 billion worth of rug pulls in 2021. That's money taken from the pockets of ordinary investors.
People like
People,
me, yeah.
yeah,
So,
people like, yeah, I was literally about to say people like you and me. I mean,
yeah, like us, people like us, yeah,
yeah, exactly.
Yeah.
idiots like us.
Yeah.
Exactly,
Yeah,
exactly.
exactly.
But that's the thing, right? Like we're people who have, um who aren't like I mean, I like to think we're not stupid, but it's just because the space is so nascent, and there aren't enough tools to truly understand whether a product is legitimate enough, and the architecture and the social incentives and mechanisms by which legitimacy comes to the forefront aren't being enforced right now. Um, we are duped essentially, and so that's what we're trying to fix. And I think from our community and from the people that are reaching out on Twitter, that's really definitely been the vibe, where it's like, people are angry and frustrated, and they are drawn to our mission, and our vision really resonates with them. And so, I think from the investor side, from the supporter side, that's very clear. From the collective side, it's been also very promising. We've talked to DAOs, groups from art and music to DeFi to metaverse to network partners like Avalanche and Near, um, who are all interested in creating collectives, providing us deal flow, creating projects, and so on. For example, art and music DAOs like Hi-Fi Labs, their whole express intent and purpose is to onboard musicians who are currently in Web 2, who are currently in these extractive, exploitative relationships with other record labels or streaming platforms, to bring them to Web 3, have them monetize their content in a more equitable, more inclusive way. And so what we present for this DAO that's basically creating a cohort of artists who want to enter Web3 is basically, hey, onboard all these musicians, have them create their NFTs, create their digital assets on Theia, and then have them, in a very low stress, inclusive, open way, get supporters interested in that project, rather than the current mechanism, which is primarily NFT mints, where there's a huge um, FOMO aspect, there's a huge stress aspect. You have to sell this out in 2 days. If you don't, you're a scam, you're a soft rug, you're basically, your reputation, if that NFT mint doesn't go to plan, is completely ruined. And so that's one huge aspect that we're trying to target.
Okay, can I quickly ask you on that? Because you'd mentioned, what was I going to say now? You talked about having assets on the in Thea. I thought you would just, I thought it was a project where the ownership of like the tokens and the shares and other things would be managed. So are you saying that people would also store digital assets on your platforms, so you're actually
So we
infrastructure for their projects as well?
So yeah, we the long-term vision is to go from 0 to 1, as Nikita mentioned, right? We want to be there from day one to to day infinity, basically, to the whole lifespan of a project, the whole lifespan of a creator, the whole lifespan of a builder. And so on our platform, we are going to allow artists, creators to mint their custom NFTs, mint their custom creator coins, their DAO tokens, all in one single place, have them deposited into our smart contract, initiate the auction or fundraise, and then also later on have treasury management solutions, have cap table management solutions, have token vesting solutions. So really just layering on the value adds and value proposition for those for our users essentially.
Yeah, I think it's important to note here that we're not closing the gates. So a common thing you see with something like BitClout or even Rally to an extent is you can create like assets on the platform, but they're always going to be locked into that ecosystem. You can't kind of go with them and go somewhere else. In terms of a functional, like a technical standpoint, what Lawrence is alluding to by like allowing creators to, let's say, mint their own NFTs on the platform is simply just streamlining the process. Again, it's making that process easier, more accessible. And I think that's something that a lot of infrastructure companies have been doing. People have been offering services to streamline the process of minting a token, creating a DAO, whatever, just making it a more intuitive process. We want to get involved in that as well. However, once you clear that primary sale, so to speak, you have the autonomy to do with the community and the asset that you created as you please. We will offer a home for that asset. It can be hosted on a marketplace that we have. But if you decide that it is best for you to go to something like OpenSea and this other platform and us, then you can. If you want to do something fully yourself, fully autonomous, your own thing, that's completely separate of our platform, you absolutely can. We're here to help projects at every stage of development. And if we want to provide a home for them throughout their entire lifespan, then we absolutely will. But we're not going to lock you in. We're not going to say, once you're on our platform, we're the be all and end all. You can only do our stuff. You don't think that?
But don't ever say don't be evil. As soon as you say don't be evil, you become evil.
Well, yeah. Well, what's the quote? Damn it! It's never mind.
I did like the 0 to 1 reference, the Pete to Thiel one. That was
really
a good one. Yeah,
that's a really good reference. Yeah, it's we want to be
full
there.
Stack.
Communities, full stack.
It also works vice versa, in a way, not 1 to 0, but for existing projects, we are really excited about this secondary market feature that we're building out, where we basically allow, say you have a collective, right? Say that you have a lot of reputation of a large community, and you really like this project, and it's currently on OpenSea or Rarible, et cetera, et cetera. We were building out this feature where you as a collective in this project can coordinate, collaborate, and have that collection then be hosted under your community, under your collective on Theia. So you essentially become the marketplace and destination for that collection, or maybe a subset of that collection. And now that's not just open to your collective members, but it's open to the whole Theia community. And that's basically you co-signing, you supporting, you endorsing that collective, and then also getting the revenue from the commission. There's no fundamental principle or reason that OpenSea has to make a 2.5% commission on that revenue on the trading. Why not have a community or a collective that's actually supporting you in a variety of ways, from advisory, from marketing, from design, et cetera, et cetera.
Just a way how it could actually play out is, imagine like FWB, right? They made a partnership with an NFT project or someone they align with, right? Who's, let's say, already got an asset on OpenSea. So let's say the same FWB has a collective on Theia. They could onboard that project onto essentially their marketplace on Theia, essentially promote that NFT project, that partnership, and they would, in return, receive a commission of the trading instead of the OpenSea. So the people who actually provide that kind of endorsement and support to those projects are the ones which benefit from it, rather than
talking. Oh, sorry.
Yes, something that's important to note a little bit is you've heard Larry say like NFTs, you've heard, we designed the system to be agnostic to not only chains but to assets as well. So we are compatible with pretty much, as it currently stands, all major DeFi assets, but both fungible and non-fungible. So and semi-fungible even. And so whether it's the NFT standards, both 721, 1155, or also fractionalized NFTs or fungible tokens that are DAO tokens or just creator coins or something of that nature. We understand every asset can serve a purpose and can be leveraged in individual ways. And we designed our system to be inherently modular. So it functions the same, from an end user standpoint, or much to the same, I should say, but that it is opened up to the full 6 degrees of separation that DeFi has to offer. And so that's why we want to crystallize it into an easy onboarding and then perpetual mechanism as well. But that mechanism is then compatible with everything that DeFi has to offer, at least most everything.
Okay, and I'll try and ask one last question before we go into a general discussion of where you see the future. What are you going to do rather when OpenSea, because I know companies like OpenSea have started to say, oh, we're going to form communities, and you probably already know that they're discussing internally about going into this market of building DAOs.
Yeah.
So how do you see that playing out?
I think, obviously there's the analogy of like the guys who created Snapchat, and they had that meeting with Mark Zuckerberg where he was offered to buy him out, and then when they said no, he showed them the clone of Snapchat that Facebook was about to launch, and they stuck to their guns, right? They were like, no, I think we have, we found the community, we're the first movers here, everybody wants to rally around us. I think our I wouldn't say advantage, but because it's inherently adversarial, but I think where we feel really confident in our approach is we're treating the problem at every level. So some of the biggest problems in the world of Web3 is this idea of trust, accountability, security, a lot of that, and that's polluting what should be a really quite incredible global discourse of that has financial elements, but social elements, and everything in between, and it's kind of constraining that. And we want to address those problems at every level, which is why we have that community curation aspect of it that opens the floor up. But then that's underpinned by a really solidified protocol that encourages that safe discourse.
Does that include tax? That if you're saying because I can imagine on these Discord channels, people try and avoid the word tax. Like, how do you link to tax systems?
Oh, you mean
so?
Yeah,
actually, on the legal side, we're actually in works with partnerships with companies like Poco Fund, which basically have off-the-shelf kind of modular solutions for whether you're, let's say, an investor in America, and it's very hard to deal with SEC regulations. You could essentially, for a low cost, $200 to $300, set up a hypothetical entity in the Cayman Islands. I can't remember the exact jurisdiction that they mentioned, but one which is more conducive. Larry, if you want to, you're the expert on this side.
It's not the Cayman Islands. But yeah, so
as soon as you said Cayman Islands, everyone's like,
"Oh God,
no!"
In terms of legal, was that the question? I mean, I don't think tax.
I think the question was because Rourke was saying that he was saying one of the differences between us and OpenSea is that OpenSea has started out with NFTs only. But we're trying to go into this with a more like Elon Musk type of approach of building the whole like rocket ship from nuts and bolts to
yes.
Right.
So the reason why we're not afraid, but we're very cautious and wary, is because our model we've quite a few different business lines. So our ability, for example, to have these collectives onboard these collections onto our platform and have them generate the revenue and us take a very small share of it is beneficial for the collective. Is also beneficial for us. for OpenSea to do that, I don't think they would want to do that because their entire business model relies on that 2.5% commission fee that they institute in trading. Why would they want, a community, a collective to take that, which is pretty much their only business line, in addition to say advertising, which some reports have come out recently, showing that they actually front run those ads. Like they actually
They do,
like
yeah.
they do inside
Yeah,
trading.
Some people have done it. Not,
trading.
you can't say
No,
OpenSea's
not the
done
whole
it, but
company,
certain-
obviously.
Don't start
Some
brilliant
employees.
accusations, Lawrence.
Yeah,
But-
don't sue me, OpenSea.
Headline mark.
I think, to be fair, the 2.5, like I can imagine creators saying, instead of, because I know that in a lot of countries, people start their like DAO or DeFi projects, and as soon as it gets big enough, they move to like Dubai or something. So it could be that people will say, "Oh, I'd rather pay the 2.5% commission to OpenSea than pay government tax of 50% or 60%." But I do see that you're going at it from a different um, vantage point of, like you said, you've got multiple revenue streams.
Yeah.
And the
Yeah.
other specific thing we'd mentioned was tax. Because you were saying that you can deal with tax in different countries, which is when you mentioned Cayman Islands. And
Yeah, so with NFTs, you are still taxed. For example, like if I were to launch an NFT collection here in the United States and that money is being routed to my Coinbase account, that's taxed, right? That revenue is taxed.
oh, how's that taxed? Do they take it from Coinbase directly?
No, it's a 10 so every time it's lovely accounting, and so I as I mentioned at the beginning of the call, so I'm also manage a fund that deals exclusively in digital assets. As a part of I kind of rolled my own portfolio into a formalized structure with some traditional finance partners out of New York that I manage. So I now manage that, and so I'm right in the thick of a lot of this, and a lot of that is in NFTs. And in short, every single time you do anything with NFTs, it's taxed in some way. So if you were to transfer, if you were to sell an NFT to somebody peer to peer, you're taxed in that event. That's a taxable event for capital gains. And also, basically, you have to account that tax burden in terms of the value for the NFT in the respective currency, and then that currency's basis in whatever fiat you use. And then you're also taxed on the way out. So if you decide to liquidate your actual liquid ether, now you're taxed again. So really, you're taxed twice. It's quite a good deal.
I think that's actually a good segue
Yeah.
to maybe start to talk about the future of where this is all going.
Sure.
Did you want to add anything, Lawrence?
No, I think that's fine.
Yeah,
I mean,
yeah.
Rourke is the. I mean, I've only been rugged in NFTs so far, so Rourke is definitely the authority when it comes to actually making successful transactions in this space.
Oh, I thought you were going to say he's been rugged everywhere. It's like,
Oh yeah, that's what I keep saying on every call. It's
Yeah,
like,
we always blame Rourke for.
For the future viability of his business, I just want to say that Rourke is a great manager, and he. But no, I do want to add that just from a legal standpoint, the same framework and legal frameworks that apply to, say, a marketplace like OpenSea apply to us. So we're not any different in that case. But we understand that the space is quite litigious, it's quite uncertain, especially in the United States. And so we want to make, going back to my point about going from 0 to 1, really providing services for the whole lifespan of a project, of a creator that's working in the space. And obviously, for the people that we've spoken to, legal is a big concern. We want to provide them services to make company incorporation, DAO incorporation, taxation, other legal issues as easy as possible to sort out and figure out on our platform.
I do like that. I like that you're going for the whole thing. Okay. So now I'll come to the final part. So I'll ask each of you. So where do you see, if someone wants to open a company in 5 years' time? Actually, who wants to go first? How would it be done?
I'll go.
No.
Go ahead.
That's a question. That's the question.
Right.
Yeah. Oh, go on. Sorry.
Who wants to go first?
Wait.
If a company wants to be formed, I definitely think, for example, Syndicate Protocol. If you've heard of it, Syndicate DAO, Syndicate.io. I'm not part of that project, but it's been founded by some really cool guys. I think the CEO and co-founder was this head of crypto at Citibank, and they funded this protocol that allows anybody. I think they primarily focusing on the United States currently, but they basically allow people to pull funds into a wallet and then have that wallet be incorporated into a company. And so they currently have a limit of 99 members. And if you wanna make off-chain investments, say in equity, in a company, do an angel investment, etc., then you have to be all accredited. But the idea that you can turn a wallet into a company in a seamless process that they offer is amazing, and they've built out the legal and financial infrastructure for that. And so props to them.
Okay, but if I'm just say I'm a plumber and I'm
Yeah.
working in New York City,
Yeah.
I'm not going to use like just say in the year's 2027. I'm not
Sure.
going to
Right.
use anything crypto unless it's going to be under the covers.
Yeah. So I guess I can answer. I don't want to be like a cop out and just start to like wax lyrical.
No cop outs here, man. You just
so
answer the question.
So my thing about like a lot of Web3 enabled tech, especially if you talk about like the NFT, for example, is a lot of the use cases for me personally going forward are at a level that is a lot lower than people think. I actually think that like some of the price point that you'll see a lot of these assets move, like in the NFT space especially, will be at a point between like $0 and $50, as opposed to like these crazy and the floaty valuations we're seeing now. And not to say that those still won't exist, but I think there's a lot of fundamental problems that like blockchain can solve. However, in many ways, the network is ahead of the infrastructure. So the blockchain is this cool validation mechanism and a lot of other things on top of that can do so much. But in order for it to fully function, there needs to be some infrastructure there that's like a hardware problem, not a software problem. There's not much that the blockchain can do about it. So
what do you mean it's a hardware problem? I don't understand.
So let me give a good example. So here's a good brick and mortar industry that could use blockchain. Think about the wine industry. So the wine industry right now, like a vintage, whether it's let's say an 85 or an 89, and it's a 1,000 bottle vintage. Currently, those bottles are out in the world, and everybody basically trades those bottles on imperfect information. You don't know how many 85 Rothschilds are still left in the world, or how many like 95 Cabernets from from California are still around.
Gary
right?
Vaynerchuk used to know.
Well, yeah, yeah. I think you would love it because I'm sure he spent his whole life racking his brains.
Oh, okay, fair enough. Remote, yeah.
Yeah, and if, for example, every bottle had a corresponding NFT, that when that bottle was opened, the NFT was then burned, that's a very clear mechanism to solve that imperfect information, that information failure. And then obviously the market would be much more correctly priced, and the value globally of something like the wine industry would be much more correctly handled. And I think a lot of brokers, dealers, buyers, and vineyards would really appreciate that, because there's a lot of data and a lot you can do to understand both the value of your stock, the value of the year, what goes into that year from a grower standpoint, but then also from a trader standpoint, a broker standpoint, where the market's kind of heading. And however, obviously, to do that correctly, you need something on the bottle. Like you need something on the bottle, in the box. You need some sort of infrastructure in the real world that corresponds with the Web3 infrastructure for it to work, right? Otherwise, it's a missed high five. It's kind of foobar. It doesn't really, it's sort of ham-fisted and it doesn't really work. However, if you clear that hurdle, if you do offer some sort of hardware components, something that's as brick and mortar in that sense, then the opportunities really become endless. I kind of extend that logical chain of inference to something like the word metaverse. You know, you hear that word being thrown around all over the place, and I think, all apart from it being a rather misunderstood term, in my opinion, if you're viewing it simply as the bridging of the digital and physical world further and further together, there's only so much that the blockchain or software can do. You know, it can kind of lie in wait and it can say, like we're ready to pounce. But until something like wearable tech for augmented reality or better, virtual reality mechanisms or, better whatever gets fundamentally created, which is inherently a hardware problem, there's not really much that the blockchain aspect can continue to do, right? So it's, I think there are inevitably a lot of the best industries and companies that will use Web3 or that will bolster Web3 going forward will almost be like the brick and mortar types, like the guys who are making the chips, the guys who are making the displays, the guys who are making the glasses, the guys who are making that, I think is really going to be what pushes the next wave of adoption further, than constantly more and more companies coming from the Web3 space, basically.
Yeah. I mean, it's interesting that you mentioned initially about the plumber, which is an individual and not a company. But so how I see the future, basically, blockchain technology allows for this distributed ledger that's immutable. And Vitalik actually came out with this really interesting paper recently called soulbound tokens, or it's a paper that talks about soulbound tokens. And it's basically this idea that you can have this token or wallet that's completely tied to your specific personal identity, who you are as a human being. And that can hold all the type of information from your educational history, from your work experience, and then you can choose to share that with the people that you want to share it with. But that can also receive assets. And so, yeah, I think any variation or exploration of that topic, the idea that you can have a wallet or token that's tied to you, perhaps even from birth, that follows with you for the rest of your life, and that people can interact with based off your permissions, really is a fascinating use case.
Yeah, in my opinion, just to answer that direct question, like how will a plumber set up a company in 10 years or 7 years? I think blockchain technology will enable it to be much more simple. Like it's as simple as literally having an app or going to a website, filling out a couple, let's say, a couple points, maybe connecting your wallet with, let's say, your soulbound token, which has all your residency, passport details, whatever the details required, and then paying a small payment to start your company. I think you could literally set up your company in like 2 minutes, in no matter which country you're in, and even maybe set up, even if you're in a different country, you might be able to use that same technology to set up a company in a different jurisdiction. And I think also DAOs will become synonymous with companies. In my opinion, I think they'll become the same thing. So everyone will start up as, let's say, as a company owning all the equity, all the tokenized equity. And then let's say if you do want to sell it to your investors, have partners, it's a much easier process using, let's say, token infrastructure on the back end than having to, let's say, write to lawyers to change your equity allocation within the company, going through that all laborious, slow process. I think it's actually going to decrease the energy and friction, and hopefully allow for much more innovation in a world where it's either too hard or too expensive to set up a company, liability, all these kinds of ancillary things. I think it's just going to make life easier in a lot of ways, especially on the business operations side of things.
Yeah, I think sometimes, those sometimes that friction's good, right? Like it's like the idea of checks and balances in the government, right? It's like, you sometimes that friction creates stability. But I think there are some pretty clear ideas, especially in starting a company or managing a company, where that constant need for third party arbitration is an unnecessary burden. It is an unnecessary friction on the company. And that's where Nikita, I think, yeah, is kind of absolutely right that something like the DAO structure, where it's self-executable in many ways, is a more efficient mechanism to contain and express your autonomy in that way.
Yeah.
Yeah.
It's also funny because we have a reputational mechanism built into our protocol that rewards and incentivizes token holders based off their activity on our platform, and that's just another part of how we're instituting trust and accountability in the space. We don't currently have that with modern company structures, right? Like, I think working in a company, a big corporation, especially, a lot of the things that people value your worth are based on is not purely on merit. It's not purely on the actual things you've done. And so maybe incorporating those on-chain activity-based reward mechanisms might be a simple way for companies to institute more equitable and justifiable ways to reward employees. But no, working. It's funny that um, Nikita mentioned the idea of making things simpler, especially from the company standpoint. Um, when we were starting our company, having to send corporation docs to our lawyer and then having those docs be sent to Delaware and then having like wait another week for those docs to be sent back for us to sign. That whole process was so unnecessary and so um, tedious, and it was definitely a use case that I think DAOs kind of solve. But also, just this week, Rourke and I are trying to look for a new apartment in New York City, and that whole process has been insanely difficult. Just going from guarantors to like signing documents and stuff like that. And we definitely see blockchain technology making those things easier.
Okay. So you so I understand that you're saying like investing in companies is unnecessarily hard at the moment. For example, so if someone starts a
Definitely.
company, you know, firstly you've got this accredited investor problem. So, someone can go down the casino and place and lose everything they've got, but they can't invest in a startup company. So it's
Exactly.
hard to even get investors. But then going back to my original thing of the plumber wanting to start a company, maybe he'll have a little hardware device which is attached to his wallet somehow. He plugs it in. It uses soulbound tokens. It says this bloke's a normal guy. He's not gonna commit financial fraud because maybe when you get a
I don't think you even need a hardware. I think you just have it on his phone.
yeah, on his phone. Yeah,
Well,
yeah.
Yeah.
Amazing technology, isn't it? Yeah, I forgot they'd
Yeah.
invented the phone.
Yeah,
So
yeah, what I mean by the hardware is that it's just like there's, you're going to need something to interface with that
Yeah.
world, right? And whether it's your phone, whether it's wearable, whether it's something, there's that technology can still improve leaps and bounds. And
just go to createmycompany.com. 5 minute, like 2 minute fill out, connect your wallet with the identity which has your addresses or whatever, pay, boom, company set up.
and the only thing they have to fill out should be the company name and what it's going to do.
Right, exactly.
Yeah. Otherwise, it'd be like not much point. Yeah. If they had to type in their name again and all the other stuff. Yeah. But
Exactly.
yeah, okay. I agree with what you're saying there. Yeah.
Yeah.
Okay.
Buying an airline ticket,
Well, I mean,
same thing.
I'm worried. I'm worried that a lot of the things that we're saying currently has been said before,
Yeah.
and there are companies out there who are trying to do this. Like WorldCoin, for example, is a great project. I think founded by Sam Altman, who was also the co-founder of Y Combinator. He's working on this project to basically create on-chain credentialing for every real human person in the world. So that's what they're currently doing, basically using a mixture of biometric information to get your information, create this basically what a soulbound token is, right? A wallet that's connected to you as a human being.
Well, we talked about this on another episode, by the way, and what someone said is when you go to a Gucci store, it's going to scan your eyes and it's going to say that bloke's a startup founder. Don't let him in.
Yeah, that's where it all gets dystopian. You know?
So sorry, Lawrence, but that's how I see WorldCoin. I mean, I know everyone likes to think it's going to make things easier, but a lot of things it's actually going to deny a lot of us access to certain things.
Yeah, that's where I think obviously.
No, but that's kind of the privacy side of things. Like if it's on the blockchain wallet, like you have to like accept to give your information, right? Like
no, you don't have to accept it. Because if you've been to a website, that cookie will know that you've been to a certain other website, and so they'll be able to get your wallet ID. Like they will know what your wallet your main account is if you've connected with MetaMask, and just based on that, they'll be able to see everything from your chain, even without you pressing connect on MetaMask.
Well, I think that zero knowledge proofs kind of solve a lot of the privacy problem.
I think what he is saying, there's definitely some
solutions.
There's some merit to what he's saying, because you know, they're like, I know that the classic thing, especially in like the NFT space or a lot of things where it's like, to protect yourself, just don't sign anything you don't feel comfortable signing, right? If you don't sign the signature request, you don't connect, you're like fine. But obviously sometimes it's just an untenable solution. And then also the idea of, as you further interlink the world in terms of data and continue to push information and kind of closing the gap of information failure to a more perfect informational state, obviously their optimal and suboptimal solutions become like apparent. And the idea of saying, I'm going to reject this person's business because it's a suboptimal play is, and so says so, it can turn tyrannical very quickly. And so that's where it's like, I think the interesting dialogue between what is inherently a permissionless environment and a permissions world in many ways will occur. Like, I think that's where there'll be a lot of really interesting interplay where, how is your fundamental right as a human being like function in a world that can kind of optimize away from it. And even with soulbound tokens, like one of the big criticisms with them is that they can be airdropped. Like technically, under current standing is you can just drop it into somebody's wallet and they can't move it. And so it's like,
but they are trying to stop that. There is going to be I saw the Consensus founder saying that he wants to make it so that they're by acceptance only.
Yeah, acceptance only.
Yeah.
But right. That's, as of right now, that's like a current that can cause some problems, right? And so there's.
Do you mean that I could like send you a token just saying I don't know. I could, or you send me a token saying idiot, the idiot token.
Yeah,
anyone who sees my thing says I'm an idiot.
And
I can't move it.
You throw enough mud at the wall, eventually it'll stick, right? It's like so. I think it's even in an accepting like an accept only sort of system, there's that's still a weighty thing. Like you're fundamentally creating a digital identity that will further crystallize yourself, your identity forever. Like it's already a criticism now that you post something on Twitter, it'll follow you for the rest of your life. Now we're literally giving it a mechanism to follow you for the rest of your life. Now, obviously,
not only that, it's going to follow your ancestors as well.
Yeah.
And they're going to say your great grandfather did this.
You're like, sure, you can opt in, but Lord knows what people opt in for and how that they regret it later on in their life, right? So, like, it's again, I think when it comes to infrastructure, I think the blockchain right now and the way we interface with it is a bit fast and loose. Like, I think it is. I think obviously, again, you don't want to just revert to another version where people have banks because they feel secure with banks and they don't want the money under their mattress, and it's just a reskin of that. But obviously, there is the way we currently operate, like, you, unless you're really on your game, like you can really like fundamentally make enormous, monumental, life-changing decisions at the click of a button.
Right? Yeah, there is, because basically you're going to have two sets of people in the future. you're going to have people who live in houses, and then everyone else who lost their hardware wallet is going to be on the street,
Yeah, yeah.
basically.
So it's that's the challenge is like, how do you keep the environment as, because that I talk to a lot of people where they're saying, well, centralization is an inevitable concept because all blockchain does is it just creates another, it's another layer of soil on, in purgatory, right? It's another circle up on top where it's a new environment, but a forest will still grow on top of it. So you'll still have, inevitably you'll have centralized entities that come on and exist in that ecosystem for the same reasons that they would have when fiat was a substitute for for gold or whatever. The question really is, how much of the original ethos can be protected with that environment kind of inevitably coming to fruition, right? And I think the cool part about blockchain is that a lot of that is just, it's cosmic. It's like, it's sort of this, it's cosmic rules. It's not something that's put into play by some sort of democracy or it's sort of like, that's why it's called Ethereum, because it's literally floating around in the ether. It's literally, it just kind of exists, and you have to abide by it because it's like the laws of physics. And
I never thought about why it's called that, actually, but yeah, that's a good explanation.
And so that's why I think there's something really cool there, but it is going to be fascinating to see how that plays out, how humanity sort of vies for control still in that ecosystem, and if we can sustain it, because obviously if it's just the Wild West constantly, that's not really a model for sustainability. But if we just revert back into just what we've come from, that's not really a good model either. So it's going to be very interesting to see how that progresses and how that kind of moves forward.
Yeah, I think what Rourke is touching on here is like the idea of how do you maintain a decentralized system but have some sort of standard on top of it. Correct me if I'm wrong, Rourke. Is that?
It's just also that inevitably, if blockchain is a new environment, it's a new financial ecosystem, you will probably see existing financial principles creep into it, right? I know blockchain's a lot more than finance, but just to stay in that lane for a second, like somebody will inevitably make like a bank, in blockchain.
Custodial thing.
A custodial thing, like we'll protect your hard wallet, or we'll protect your.
Just like the Coinbase is a new product, so they're launching this half custodial wallet or something.
We'll insure your assets, something like that, right? Inevitably, that will be a thing, and it's just a question of, well, once that happens, do we then start to come into, does accreditation become a thing again? Because I'm never going to engage with you unless you have this accredited soul bound token, and then before you know it, we're back to where we were. It's just a reskin. It may be run on more efficient means. Sure, like the executable processes may be more efficient, but the principles remain the same. And so the challenge is, how is blockchain simply in a more efficient mechanism for the world to function in many ways, but along the same tram lines, or is it actually an evolution on the way we think and operate as sort of human beings in even 1% of who we are?
I think the thing is, because central bank currencies will come in. The big fear is that that people will get their salary and there'll be new ways to tax you. Like say you could have to spend this money in 10 days.
Yeah, obviously, like the everybody talks about how crypto is difficult to regulate, and sure, as it currently stands, the way to regulate the end user is difficult. But then that again, it's just because the infrastructure is not there. Like if it's literally a completely and eternally recorded
database. It's way easier.
That's actually a lot easier to regulate if you can grasp it, if you can grab on with two hands and hold on to it. And obviously, if central banks, governments get involved, then inevitably you're not giving them less power, you're giving them more. Like, it's just there. If everybody buys into the system, then inevitably whoever has the stick, the monopoly on violence, as I think Elon Musk likes to say. The mechanism is just another way to enforce that. So have we gone anywhere?
Yeah, I mean, I think that's one of the big criticisms, I think, of Bitcoin or Ethereum with these open ledger technologies is that everyone was saying they're super privacy centric, but wait, the whole kind of ledger is open. So if you actually want to use your money in the real world, you're going to have to eventually fork over your identity. And then they'll trace you back that money. Sure, they don't have let's say the authority to just go into your wallet and take the money, but I mean, it's going to be pretty much the same thing. They'll just blacklist you, and then no, let's say business entity, you just won't be able to use your money. So
no, they will have the
I think
authority.
that's
They'll knock on your door, and it'll be a massive bloke.
Yeah, exactly.
yeah,
the monopoly on violence, right? There's still, people forget that element that that'll just always be there. But as Nikita mentioned, you talk about something like the SEC. In the world as it currently stands, the SEC, when you deal with banks or financial institutions, they have this, not only the SEC, but the FDIC as well, have this really clever way of almost ensuring American standards globally by making it, okay, if I'm a bank and I want to, deal with an American incorporated company or something, I have to apply by those regulations. But then also, if I want
Stripe, if I want to use Stripe,
but if I also deal with a foreign entity, that foreign entity just so happens to deal with American clients in any way, they and I still have to apply by those regulations. So even if I'm a Chinese bank, if I want any engagement with American companies, I have to apply by American, basically federal regulation. Otherwise, they won't let me. The America won't let the company deal with me, and I won't be allowed to engage with the company. And then blockchain, you can have that exact same thing. Like, we blacklist this wallet, and now any cash that comes from this wallet and enters another one can't be spent on the same thing, right? So it's a very easy way to freeze somebody's assets in the world, right? And it's almost a more efficient mechanism there too. So at the end of the day, even without all that involved, I still, there's still clear efficiencies on the end consumer standpoint that blockchain provides. Like, even though maybe the jury's still out on whether or not it's like a revolution, it's a whole new world, that kind of thing. But it's still.
What film was that?
That's Aladdin.
Was that Pocahontas?
I think it was Aladdin, wasn't it?
Oh man, I'm not sure.
When they're on the
I've got
carpet.
to watch my Disney, man.
Yeah, it is Aladdin.
Okay, cool.
You've got expert here.
I hate how I know that. I hate how you.
But I still think that there's so much utility to it it will be an adopted piece of tech because it just offers relief to a lot of industries, right? And so, but inevitably one of those industries is probably going to be the guys that people built it.
government.
Yeah, not really for, right? So, it's all fascinating to me. I can
we can spiel about this for
graph all day,
All right, let's finish up now, but let's let Lawrence have the last word since we can't see him, and since I've cut him off the most.
No, it's okay. I mean, I'm sorry. I didn't get much sleep last night, so I'm definitely not in an optimal state. But no, I agree with what Rourke is saying. I fundamentally think about this in terms of like bottom up, top down. So currently our economic system is very top down, right? When it comes to whether it's the United States, pretty much any Western developed democratic country, the how institutions are structured allows for relief to come at the top and that to trickle down, what people have called trickle down economics. You kind of saw that in the pandemic, right? The United States federal response was to pump the stock market with money, keep the repo markets running, buy bonds, keep liquidity in the market. But who did that really benefit? It benefited the people who had stock, who had bonds. stock primarily. It benefited the people who already had assets. It benefited people who had homes, who had equity in property. And so it just accrued all the benefits to the top 1, top 5, top 10% of the economy. What, crypto assets really allow for, and what I think is a fundamental part of what we're trying to do here at Theia, is allow digital assets to proliferate at bottom up, right? When it comes to creators, when it comes to builders, when it comes to people across the world, when it comes to individual people who are influencers, who are curators, who are steadily becoming in their own right creators. We're giving them a way to engage in this landscape and engage with this financial system, engage with this social platform in an easy and accessible way. And so that's how I fundamentally see this transition into this new world, whether you want to call it Web3, blockchain, crypto. It's fundamentally reshaping an economic system that has hitherto been very top down, and sliding the scale towards the bottom end of that scale to really empower people at the bottom and have them go bottom up.
Oh, well said. I like that. Okay. So I think with that, I just want to thank you guys for your time. And any last comments?
No, thank you for your
Thank you.
time.
Yeah.
That's great. Thank you.
Yeah.
Thank you for your time and
This is
thanks for having us.
Yeah, thank you.
It's a
Thank you for
pleasure.
having us.
Thanks. Bye.
Take care. Bye.